I think there's been a lot of really cool things that Grandma did that have stood the test of time. They've actually been around for hundreds, if not thousands of years, that can really be applicable now, not just the latest and greatest, supposedly greatest products out there. Each company issues a annual report that is available typically on their website, and you can see it broken down. If you wanted more information than what they even break down there, I bet you could get it if you asked for it, especially if you are a policy holder, because it's in the kinds of companies that we use for Bank on Yourself, they're mutually owned. A lot of the reason that businesses fail is because the owners run out of money. And this getting your personal finances in order, having a savings, having that nice solid foundation that a whole life insurance policy can give you, can really set you up then to do some really awesome things in your business.
And that is coming up next on Bootstrapping Your Dreams show, so stay tuned. So, the big question is this: how are ambitious people like us, who don't have a lot of resources, did not go to Ivy League colleges, were not born into wealth, how do we become resourceful enough, use our creativity, our dedication, and a little bit of crazy to bootstrap our way to realizing our dreams? Whether it is launching a new company, launching a new app, or making it to the top of the corporate ladder. That is the question, and this podcast will give you the answers. We have created a tremendous community of bootstrappers, entrepreneurs, and professionals who are ambitious, resourceful, and want to get things done. We brainstorm, support, and help each other out. So come join us. Navigate to bootstrapping.group, join today, and get the Startup Founders Technology Accelerator video series absolutely free. If you enjoy this video, then do let us know by hitting that like button now. Or if you want us to improve our content, then go ahead and hit that thumbs down button and give us your honest feedback in the comment section below. Here at Tetanoodle, we are passionate about entrepreneurship, technology, and innovation. Every week, we bring you insightful and engaging videos, interviews, tips, tricks, and strategies to help you grow your business or rise in your corporate profession. If you're new here, please do consider subscribing, and do not forget to hit that bell icon so that you are notified when we publish new content. Hello and welcome to this new episode of Bootstrapping Your Dreams show. I'm your host Manuj Aggarwal, and today we'll be talking with Amanda Neely. So Amanda is a Bank on Yourself advisor. She works with sensible individuals and couples who want to develop a personalized financial plan that brings peace of mind regardless of life's ups and downs. She has developed strategies for getting out of debt quickly, for saving for big expenses, and for taking advantage of life's opportunities, all in one financial product. Using her financial analysis process, her clients get an overall true picture of their current finances and a personalized plan to reach their financial goals at zero cost. That's amazing. Welcome, Amanda.
Great to be here. Thank you for having me.
Awesome. So tell us a little bit about this concept of banking on yourself, and how do people can get out of debt and save for big expenses at zero cost. I mean, sounds like too good to be true.
Yeah, that's a great question. So I think the best way to answer that is to tell a little bit of my story. I started working with actually a former guest on your show. His name is Mark Willis, around 6 years ago, and he was the first one to introduce me to this concept. And I've never paid Mark a dime. My money has never gone to him. But instead, I have shifted some of my financial strategies, some of where I was putting my money, into this Bank on Yourself program. And I've been using it. I paid off my student debt. I got through a really rough time in my business. We got out of business debt as well. And it's really helped transform how I think about money, what I'm doing with my money, and put me in a much better place financially. And that's why I decided to make this my second business. After my first one, I sold it. So.
Awesome. And so, are you telling me that you got into finance because of the personal experience you had?
Yes, exactly. My background, I came out of college working for a nonprofit. It was my first job. I was ready to change the world. Decided after a couple years of doing that entrepreneurship was really how I wanted to change the world. And my husband and I opened up our first business. It was a coffee shop. So my background very much in, social change and coffee. And then decided that really like helping people figure out what's happening with their money can also help transform them and transform the world. So it's kind of a continuation of my dream there.
That's great. So, did you have to take any formal training for this, or is it easy enough for anybody to sort of grasp?
There has been lots of formal training, both like this on state levels and with certain companies that we work with, and then with the Bank on Yourself division. I've gone through lots of training with them as well.
Awesome, that's great. So now coming back to the financial planning, you help people build wealth there, this is in your materials from what I found. Build wealth their grandma would be proud of. So, what do you mean by that? It's quite an interesting quote.
Yeah. So people that are my generation, when we think about our grandma, that would have been the greatest generation, typically, is who our grandmas were. And our grandmas came of age during the Great Depression, and they um, had to figure out financial tools, how they were going to manage their money in that atmosphere, which happens to be very similar to the atmosphere I came of age in during and after the Great Recession. And I think there's been a lot of really cool things that grandma did that have stood the test of time. They've actually been around for hundreds, if not thousands of years, that can really be applicable now, not just the latest and greatest, supposedly greatest products out there.
Cool. And so, what are the differences between the traditional approach of managing your money and how people do it these days?
Right. Yeah. It's funny when you say traditional approach, what most people think of is 401ks, IRAs, but those haven't been around very long. Early 1980s or when the first 401ks were started. So the real traditional products are things like whole life insurance and annuities. And that actually in grandma's day, about half of Americans had whole life insurance. And kind of the difference there is that your money is not going to an investment firm or a bank, it's going to a life insurance company. What they do with that money is very different, and how it makes your money then do very different things depending on who you're giving it to help grow it for you.
I see. And so, why is this strategy not very well known? Is it because people don't know, or is it this industry is not sharing enough information with people? What's going on?
That's a great question. So there's multiple different factors because there are a lot of people that still have whole life insurance. I've heard that it's still the most popular type of insurance, even though you might think term insurance for life insurance is more popular. There are congressmen and presidents have had this particular kind of whole life insurance. So I think it's more popular than people realize, but because it's a private contract between you and the insurance company, it's not available in like public records.
I
But
see.
then the other factor, which I think is really important, is that the commission that I take as a life insurance agent, especially for how we design them to do the bank on yourself type whole life insurance policies, our commission is 50 to 70% less than the commission for even just a typical life insurance agent. And even that is way less than that, like 1.5% that you might pay for assets under management to an investment firm. So most of the people going into the financial advisor field are going where they're going to make the most money.
Mhm. Yeah. So, so now coming back to the regular sort of investment vehicles that people adopt, like as you mentioned, it could be term life insurance, it could be stocks, bonds. So, how is this strategy better than those approaches? Like in stock market, people generally make decent money if they know what they're doing, and then they can balance the volatility with bonds. So, how is this different?
Yeah, what I would say is that this allows you to still do those other things in a safer, more predictable way. So there are people that first put their savings into a whole life insurance policy. Then when they see a really great opportunity in the stock market, they can actually access a portion of what they've set aside in their life insurance policy and go buy those stocks.
Oh,
And then at that great opportunity, and then when those they're ready to sell those stocks, they can sell them, put the money back into the life insurance policy, and meanwhile, they their money that's within the life insurance policy still continues to grow as if they didn't touch it, because they're with a mutual based life insurance company that's what's called non-direct recognition. So they're not directly recognizing your cash value, they're giving you those funds from the general fund instead. So
I see.
that's one fun thing. You can still get the big returns, but you have this foundation of nice, consistent, reliable growth within your whole life policy too.
I see. And what about any volatility, any risk of losing your value due to inflation and things like that? Is that affected? I mean, this strategy, is it affected by any of these issues?
There is some concern with that. We there That's a whole like can of worms that we could talk. Probably the biggest concern, and as the is what the insurance company with the money, right? And about 70 to 80% of their funds are in investment grade corporate bonds. And if people know this market at all, we know that corporate bonds and bonds in general have really low interest rates right now because the interest rates are low for everything. Um, and so there's the risk that if rates stayed low, that there wouldn't be a big return within these kind of policies. One thing that I'm comforted by is that bonds are typically held for 30 years. So my life insurance company most likely has bonds of about 30 years old, maybe 20 years old, and interest rates are a lot higher then. So I'm still getting the benefit of that. And as the current bonds mature, hopefully interest rates will rise and they'll be buying new bonds. I'll get those rising interest rates. And they just have massive amounts in their general fund. So that helps too to offset whatever. And then they also have a business model that they've perfected over hundreds of years too. That helps a
Nice.
lot to offset any of those things.
And how can you tell, like, is there information available what exactly they're investing in terms of, whether it's bond, 20-year bond, 30-year bond, whatever it is? Can you get that information from the insurance companies?
Yeah, each company issues a annual report that is available typically on their website, and you can see it broken down. If you wanted more information than what they even break down there, I bet you could get it if you asked for it, especially if you are a policy holder, because it's in the kinds of companies that we use for Bank on Yourself, they're mutually owned. As a policy holder, you're an owner of the company. You better be able to find out those kind of things if you want.
I see. That's great. And now talking about your experience, you said you had student debt, you had business debt. So can you really be debt free, like, through this? Like, I mean, it doesn't sound really possible that you invest in something, you don't have the money, and now you're debt free. How does that work?
Yeah, well, I actually consider myself better than debt free, because I took out. I'll just use the student loans as an example. I took out a loan from my whole life policy and I paid off the student loans. But because my cash that I'd built up there is still growing as if I didn't touch it, it's actually earning a better rate of return than the interest that I'm paying on that loan back to the insurance company. So I'm positive on those funds. And I think that's better than just being debt free. There's so many people, yay, I'm debt free. And they don't have any wealth growing for them. Once you pay back the student loan company, you never see that money again, right? They're not going to like give you a new loan just for whatever reason. Whereas this is a dynamic fund that's continuing to grow. I'm continuing to see benefits from for the rest of my life.
I see. And can you also pay off any kind of debt, let's say credit card debt, with this?
Yeah, anything that you want to do with the funds, you can do. You could go buy a car, you could pay for your kids' college, you could buy a home, invest in your business. It's your money. You just tell the insurance company, here's how much I want. Here's me, my signature, so you know it's me, and they send you the funds, and you can do whatever you want with it from there.
So that's a amazing thing because obviously credit card interest is huge, and if you can pay it off quickly, isn't that like going to make a huge difference in your financial situation?
Yeah, we actually do that kind of analysis with people all the time, where I say, let's look at, maybe you use one of those popular methods for paying off your debt, like the snowball method or snow avalanche method. And we can help run those numbers, show you what that could look like. And then let's compare what we're starting to call the snow bank method, where instead of just putting that extra money toward your debt, you put it into a bank on yourself type policy first, and then you pay it off when the balance is equal. And then let's see, maybe it takes you longer to pay off your debt, but what does that mean for your retirement in 30, 40 years or 10 years or however long retirement is for you? What's the difference? And kind of not just comparing how quickly and how much interest do you pay, but also what can those funds grow to?
Got it. And what about real estate? Can you invest in real estate through this method as well?
Absolutely. I'm about to do that myself. In 2020, I'll be purchasing real estate, and I'll be using the equity that's built up in my life insurance policy to make that purchase.
Awesome. And so, here, what I would like to ask you is why is, knowledge like this is not prevalent? Like people do not take initiative to learn. I know I asked similar question earlier as well, but this is a bigger question about the
Yeah.
financial industry, how to manage finances. I mean, everybody knows credit card debt is bad, but, people just keep on borrowing more and more. So what is your opinion about it? Why is this happening? Why are people not more financially educated?
Yeah, I mean, it's kind of human nature that we want what we want and we want it now. So we go and we buy what we really can't afford. And that puts us in a situation where we have to go into debt. In my case, I think this is true for a lot of people as well. I subscribed to Susie Orman. She was like, I thought she was the end all be all of finances. As I came out of college, I bought one of her books. Like, I'm going to follow all that she says. And it was really only because I allowed myself to be open to other ideas that this idea of banking on myself, becoming my own source of financing, really um, hit me and allowed me like to be open to it. If I had probably heard of it without having an open mind, I was like, well, Susie thinks whole life is horrible. I'm not going to even listen to that. But unfortunately, a lot of people like they listen to Susie or they listen to Dave. And if anyone says anything contradictory to them, they just ignore it. So or I'm sure there's other gurus out there. Those are the two most popular that I've come across. And I think in some ways, a lot of people are just listening to what everybody else does and what everyone else says, rather than taking the time to find the truth for themselves.
I see. Now, what about taxes? Because one of the biggest expenses that we have are taxes. So, how does this strategy work in terms of taxation? Like, does it save taxes, or is there any advantage?
Absolutely. That's a really awesome concern. You're asking the right question there with taxes. Some people call this strategy the rich man's Roth, or I would say rich woman's Roth. And unfortunately, like Roth is Mr. Roth. He was a congressman that passed the Roth IRA in 1996 or 97. But so it's kind of weird to call this the rich person's Roth, but um, it works very much the same way. You pay the taxes in advance on the money that you put in, and then if you do everything correctly, follow all the rules and guidelines, you can access the funds and use them tax-free throughout your lifetime.
Awesome. And a lot of people in our audience, they are, either existing entrepreneurs or aspiring entrepreneurs. So can they use this strategy to build a business, or, use some funding in their business if they have an existing one?
Yeah, there's some really interesting strategies for business owners and entrepreneurs. In fact, I wish I would have known about this strategy before I started my first business. It would have been a lot better. But I mean, a lot of the reason that businesses fail is because the owners run out of money. And this getting your personal finances in order, having a savings, having that nice solid foundation that a whole life insurance policy can give you, can really set you up then to do some really awesome things in your business. And there's some cool ways within your business to make sure, like, let's say you're taking on an investor and that investor is going to give you, maybe it's a loan and they want to make sure that their loan is paid back. You can actually use your life insurance as leverage, where if you pass away, they're going to get paid back, right? Or if you have a partner, if you pass away, your partner might not want to work with your significant other, that who would inherit your shares. Life insurance can be a cool way to have your partner receive a benefit when you pass away to then buy your shares in the company. There's all kinds of cool things you can do there.
Awesome. And now let's talk about your entrepreneurial journey. So, you went through a couple of businesses. So this is your second business. Let's talk about the first one. What are some of the mistakes? Why did it fail? What are the mistakes that you made, and what kind of lessons did you learn from it?
Yeah. So I was actually really excited when I first heard about your podcast with bootstrapping, because that's exactly what we did to grow our first business. And we wrote our first business plan in 2008. We sat on it for a year. And then in 2009, we actually started pursuing it. Not a great time to be starting a business, but we didn't know any better. So we just figured it out. And we exactly, sold coffee beans door to door, through events, and invited people, and really like to get the money we needed to buy all the equipment and do all the startup. And it took us till 2011 to actually start. Maybe one of our mistakes was not pursuing bigger funding, from bigger sources. We didn't really have assets that we could leverage to, get a loan from a bank, or, like we didn't have a home that we could use as collateral. And we still had tons of student debt ourselves too. So it's not like we had a rich uncle or anything like that either. So kind of the failure there is maybe we just decided to scrape by the skin of our teeth, make it happen, but also was a strength. I know Damon John talks about that a lot, start broke and you're going to start really, in a lot better place than someone that starts with a lot of money. But then after we got started, we stayed in that broke mentality. We continued to act like bootstrappers, and I think to our detriment for a while. And to start thinking, spending more on marketing, not, maybe hire more quickly, stuff like that. I think there's a fine balance that from how you start broke, but don't act like you're broke the whole time. So we ended up selling the business after 6.5 years in operation, to a really great nonprofit that's now running it. And actually they're having to restart it because the building kicked us out, but they're doing a great job of restarting. And in some ways, it's actually that selling, they're taking the mission and what we were trying to have happen behind the business to the next level, because they have a 30-year history. They're not in that broke mindset and I'm really excited about the future of that brand and what's going to happen with it going forward.
That's great. And now let's talk about college students. So how early can somebody execute on this strategy on banking on themselves? Like, does it have to be a certain age, certain net worth? What are the qualifications for this?
Yeah. So there's not a specific age. Actually, my 1-year-old already has a bank on yourself type policy. Obviously, he's not paying for it. Someone else is. But also when you're in your 20s, just finished college, they're going to be looking at and if you're paying for it yourself, they're going to be looking at how much income are you making? Can you afford to, be putting this money into the policy, that kind of thing. Just like a Roth IRA. If you're not making any money, you can't money into a Roth IRA. It's going to work very similarly. But as soon as you have an income, as soon as you have money that you want to be saving for your financial future, whether it's short term or long term, absolutely you could start a policy.
I see. And what about, like, is there any funding requirement? Like, is there any minimum? I don't know how how you even evaluate, like, is it based on premium? Is it based on the payout that you get at the end of the policy? How does that work?
Yeah, we have a couple different ways that we can go about. Say you knew what death benefit you wanted, we could say, here's how much premium you'd have to pay. Let's say you knew when I turn 60, I want to have this much in income from it. We could say, well, this is how much you need to put in. Or we can start with, here's how much I can save on a regular basis, and then we can build it from there. And we custom tailor every single one of these policies to the individual or to the couple, depending on what their goals are, what their situation is.
Oh, got it. And now let's talk about your podcast. So when did you start this podcast?
Yeah, it was a little over a year ago that we had our first episode come out. But I've been a content creator since 2009 when we started actively pursuing that first business. I did a blog, I did a video blog, I've had another podcast, but this one for the year.
I see. And what is the name of the podcast? How is it going?
It's going really well. It's called Grandma's Wealth Wisdom, and we have a lot of fun with it. Where I am sort of an information hoarder. I love to hoard information, and this is really the way that I grow, with helping share that information with others. That's kind of my maturing. And how I become a better person. So in that way, it's really helping me a lot. But I've also gotten really great responses from the people that are listening, that are learning so much and being connected to information that they're like, I can't believe I've never heard this before.
Yeah, that's cool. And how does that fit into your business model? I mean, is it merely for collecting information, or is it helping you in your business as well?
Yeah. So we don't get paid for the podcast. We don't do any advertising or anything like that. We actually get paid for success. So when we find strategies for people that they love and that they want to implement, whether it's bank on yourself or whether it's something different, we make money when we have that match happen and they say, I want to do this. I love it. Kind of like affiliate marketing. We don't recommend products that we don't use and love ourselves, but at the same time, we don't actually collect money from the individual. They pay the same amount that they would pay otherwise. And then we just get a portion of that sale because of our contract with the companies.
Yeah. So it's more like a lead gen or marketing tool for you?
Yeah, both that and, again, it's helping me grow as a human
Yeah.
being too.
Yes, for sure. So where I was going with that is like, how would a lot of people, as I said, in our audience are entrepreneurs. Will you recommend them starting a podcast about their business as well?
I definitely believe in content marketing in some way, shape, or form. What I would recommend is whatever way you consume information. So if you love YouTube and that's where you go instead of Google to search, for an answer, or if you listen to tons of podcasts, or if you do like reading blogs, create the content in a way that you are also consuming it, and you'll create better content and you'll reach people who you really connect with. But if you're not creating content, it's hard to then connect with people. So think through, like, who you want to connect with, how you naturally consume content yourself, and then create content in that way.
Awesome, that's great. And through your work, through your podcast, you must have come across a lot of people doing different kind of things with their money. What are some of the common mistakes that you notice people make with their money?
Yeah. There's a lot, right? So um, the, I think the biggest thing that people are doing is just doing what they've been told by, like, the HR person at work, or their peer from college, their college roommate, whatever that person's doing or told them to do, they just do blindly without thinking through, is this really the best thing for me? Does it match with my values? Does it match with my goals? And if you take the time to do that, and do that with somebody who's going to help you think through that, not just try to sell you a product, it can totally transform the future, and as well as how you feel about your money right here and now.
That's great. Okay, that's awesome. Thank you so much for sharing this information. It has been a pretty interesting conversation. Is there anything else that you may want to share about financial literacy or this new strategy that you're working on with people?
Yeah, maybe. So sometimes when people hear the words bank on yourself, especially if they're like me, they're maybe a millennial, and I want to live in a connected world where everyone is benefiting each other and I'm connected with them. Does banking on myself seems too independent, self reliant kind of thing. But actually, because we're using mutual companies, and if you look at the history of life insurance, it's some of the most connected ways you can operate with your money. Life insurance was started because two people came together and said, I'll take care of your family when you pass away if you'll take care of my family when I pass away. And people started becoming bigger and bigger groups. Like, I want to be connected in that kind of way with other people as long as I benefit too, right? And to be part of that kind of story rather than padding the wallets of people that got us into the financial crisis in 2008 in the first place and are probably going to get us into the next one. I mean, that really aligns with my values and how I want to operate in the world with my money. And if that's all you get out of this conversation today is thinking a little differently about how you're connected with others, I think that would be the most important thing.
That's amazing. Thank you for sharing that wonderful thought as well. So now, before I let you go, can you tell us how people can reach out to you?
Yeah. So our website is grandmaswealthwisdom.com, and you can check out the podcast there. Or even better, there's a request a meeting button. You can click that and schedule a phone call with me. I love talking to people on the phone, getting to know you, hearing what your values are, answering any questions that you have. So you can schedule a 15-minute phone call there, and I can see how I can help.
Awesome. That's great. Well, thank you once again for being with us today and sharing this information. Thank you.
Thank you. It's a pleasure.
And that's all for now. Until next time. Now, if you're an entrepreneur or a career professional, then I invite you to join our growing community. Navigate to bootstrapping.group. As a welcome bonus, you will get the Startup Founders Technology Accelerator video series and Mastering Your Inner Game video series absolutely free. This series of short videos address some core issues which are instrumental in helping you move forward in your business or career. The videos are yours to view and share for free. No obligations or strings attached, except for one. You have to take action and implement it. So join us today. Navigate to bootstrapping.group. If you want more engaging videos and insightful interviews with industry's thought leaders, then check out the other videos we have picked for you. The link is right there. And if you want to be notified about our new content, please do consider subscribing to our channel.